welcome, it's denome. It's been a long time since I made a video last time, and I thought it would be fitting to make a video now, since the markets have gone down a little bit, especially the Bitcoin market, and we are currently below the yellow line here of my charts that I've showed many times in the past. And a lot of you guys are asking, what should I be doing right now? Should I be buying? Should I be selling? What the hell should I be doing? And the short answer is that you should probably be doing a little bit of everything. So hedge against the downside, but also accumulate more coins if you can. And in this video, basically, I'm explaining why I still hold that view. So I'm not all in on a crypto. I bought a little bit of Bitcoin and Ethereum so far, but definitely not going to go all in at this moment in time. And my view is actually a combination of the view of two different people who can explain things much better than I can. The first view is by Data Dash. He published this video a few days ago. And this is basically comparing the Bitcoin chart, which looks like this, that we go a little bit lower from here, and then we have the big upside, maybe all the way up to $200,000. I don't know. That's the bullish side. I think that's a great view to have. That could definitely happen. But the bearish view is by Robert Prechter, who is the founder of Elliott wave theory. And he has been looking at the markets and trying to find trends that go like all the way up to 50 years. For every single trend. And in this video, this is $99. You can actually watch it for free if you use the code DECTHE, so you can access it completely free. I'm not affiliated with the system. I'll also watch it for free, so I'm just sharing the code here because it was available online. Anyway, this shows a lot of charts that show that the markets are way overvalued at the moment. And crypto, it is correlated with the stock market, with the real economy. So if the stock market goes down, then Bitcoin will probably go down with it as the money is exiting the system. But anyway, this is a great video to have. I have this view as well. I want to hedge against this like a massive great reset style crash. If this actually happens, Bitcoin can go all the way down to even 10K, even 5K levels. I don't know how low it can go. But if we see like a major, massive crash, it can be a crash also on a societal level. So right now, whatever the case is, if we go up or down, it is up to the Federal Reserve and their money policy if the markets will go down. Because either we go to the hyperinflation route, where we just keep inflating the monetary supply and keep inflating the asset prices, or we will have this major crash. Anyway, it is up to the Fed to decide on their money policy what they want to do. Do they want to just continue inflation, or do they actually want to cause the market crash? And there's no real middle ground anymore, because if you look at almost any major company out there, they are hardly making any money. They're probably losing money, and the money that they are giving to their employees, they get from debt. So there's a lot of debt in the system as well. So if there's this major crash, then I want to have money available to survive and also to buy the dips when there's like real blood on the streets. So for that reason, I'm currently 60% in crypto and 40% in stable coins. If we see like a major crash, my all-in zone is basically the previous all-time high, about $20,000, but the price can actually go even lower than that. So I'm not gonna go all in even on 20,000, even though I previously said this is basically my all-in zone. Because when we look at Bitcoin has never been in a depression, in a deflationary depression. It has only seen inflationary monetary policy. So when the market condition changes from inflationary monetary policy to a deflationary high interest rate policy, then whatever this chart is showing can basically be put into toilet also, because this behavior that has happened in the past has only happened because of inflationary monetary policy, loose monetary policy. And that's where Bitcoin survives very, very well. And because we don't know where the Fed will go, I just don't want to risk all my wealth to centralized power to decide if the price will go up or down. So that's basically my reasoning, that the price of Bitcoin, it can crash like to completely insane levels, maybe even to something that we saw here on 2013 top. I don't know, that would be completely crazy, and the chances of that happening are like 1% or very, very low, but it is still a risk, and I want to hedge against that risk because I don't want to lose the wealth that I have accumulated. Anyway, continuing the story where we're currently, in the short term, just looking at the chart here, this box here all the way down to 27,000, that's basically the buy zone for this dip. And if you take a look at the long-term view, you can see that on the logarithmic chart of Bitcoin, I have made these yellow lines here that show different areas where the trend usually has a reversal or some price action on that level. And currently we just dropped below this yellow line here, and every time we drop below the yellow line, we will go and visit the dotted yellow line here as well. So it is very likely for the price to actually go even lower to like a 28,000 from here. So that could definitely happen because it has done so every single time we have gone below the yellow line here. And many times we even go to visit the strong yellow line here as well in the past, whenever the price goes all the way that low. And that has happened 2 times here, and every time we go to that level, you can see that there's like a major massive crash, like a very aggressive crash when we go to visit the strong yellow line here, and that would actually align perfectly with the all-time high right now. So if we go see the 2017 high, I mean not all-time high. So if we go there, $20,000, that's where there will probably be a lot of buying. And right now, even though price had like a 11%, a 12% move from the bottom already, there's not really that much volume on the price. And usually when there's a big reversal, you can see a lot of volume happening in the price. And there's just not that much volume going on the charts. And even here, you can see this move here, there was a lot of volume going on. And if we take a look at the 2020 crash, which was this one here, you can see we had a similar situation where there was not really that much volume going on in this sideways move, and then we had this major massive crash that blew everyone out of the water, and then we had a massive buying volume right after that. And because I'm not seeing that crazy volume right now, I think there could be more downside to go, maybe to 28,000 or maybe even to 20,000 if we see this crazy massive crash this year, sometime this year, before basically this is June. So I don't know, maybe in the next 6 months we will see like a major crash, maybe not, we will see. But anyway, the message of this video is to show that anything is possible, and it is up to the Fed to decide where we go. And right now you might be thinking, no, definitely we're not going to do that. They have shown us many times that they will not let the markets crash. But like I showed in the Great Reset video that I made some time ago, the goal of the elite, the insiders, is to accumulate as much wealth as possible. So by 2030, you will basically own nothing. So they want to take your assets away. This is a little bit a conspiracy theory. I don't know. I think the wealthy people want more wealth. I think that makes a lot of sense. And the way they can do that is through major crashes. So when there's a major crash, people will sell for a cheap price, and then they can accumulate more wealth. So and these major crashes happen every now and then, usually about 10 years, and now we are already 2 years behind of our major crash. We had this in 2020, but it wasn't like a major crash. It was just like a mini crash. So I don't know if this will happen or not, but that's why I want to hedge against it and show you that I'm hedging against it as well. But on the bullish news, we are currently seeing a bullish hidden divergence on the RSI indicator compared to the price. So the oscillator, the indicator here, is going lower while the price is still going higher. So we might have the reversal here that DataDash is showing. That's definitely an option, and I completely subscribe to that idea. But in case that doesn't hold true, I just don't want to go all in at this moment in time. So currently I'm accumulating Bitcoin, I'm accumulating Celsius tokens as well. Those are basically the only coins that I'm currently accumulating. Some of my calls from last year, like Band token and Auto token, were complete trash. Even Celsius had a major crash. But on February, Celsius will actually have a lot of news. So even if the markets go down, I'm quite bullish on Celsius, just because they have the in-app swaps coming. They will have Solana on their application, and just because they're growing quite rapidly, and they have the Celsius X coming at the end of February. So a lot of good stuff coming from Celsius. So that's why I don't want to sell at this point. I'm just accumulating more. I'm not like buying crazy, I'm not buying it like crazy, but I'm just accumulating slowly. And from these dips so far, the only coins that I have actually bought are Bitcoin and Ethereum, but the other ones I'm just accumulating with a yield that I make with stable coins and like Ethereum yield and so on, yield farming. Anyway, that's basically my update for the markets. I recommend watching these two videos so you can get an idea of the bullish scenario, as well as you can get the idea of the extreme bearish scenario. Maybe this is like a 1% chance that Fed will change their monetary policy, but if they do, then the market behavior will be different for Bitcoin, and Bitcoin has never seen a deflationary market condition, and I don't think it will be bullish in that market environment. So it's all up to Fed basically where the markets will be headed. So we will have to wait and see what they say. But right now, because I don't want to, put all my wealth in the centralized body of the central government or the Federal Reserve, that's why I want to hedge with fiat currencies as well. And because we are currently not seeing the volume spike yet, I don't think this is the reversal yet. So once we see the volume spike, the price will probably go up as well. So if we see something like that, then we could have a good reversal. But I haven't seen that yet, so I don't know. Maybe it will happen, maybe not. But I would not go all in on this dip here. Anyway, that's it for this video. Hope you liked it. If you have any questions, leave them in the comments. And if you want to join our community, it is free. It's on Telegram, and the link is somewhere in the description. You can join there as well. Anyway, thanks for watching, and hopefully I will be putting more videos in the future, a little bit more regularly again. We'll see. But the markets, they are quite interesting now, so I think I will be making more videos again. Anyway, that's it for this video. Hope you liked it, and I will see you on the next one.